And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to another market forecast. Today is Thursday, September the 16th. I'm John Hoagland. Thanks for trusting me with your time. As always, we're looking for context, good risk management, and patience in our trading today. Markets moving in certain markets a little bit more than others, of course. Today is Thursday. We've got today and tomorrow to finish writing this week's chapter in this year's book. Hopefully you've got markets on your way, going your way already this morning. This was the biggest day of economic numbers this week. 7:30 this morning, the weekly jobless claims numbers came out. Initial jobless claims, they were looking for 330,000. They came out a little bit higher at 332,000. A little bit of sunshine, I think, on this from the continuing jobless claims. A pretty big drop in that. They were looking for 2,785,000. It came out 2,665,000. So a pretty decent drop in continuing jobless claims. Philly Fed is another bright star, I guess, in this sky we're looking at this morning. They were looking for 18.8%. It came out much bigger at 30.7%. And retail sales also coming out good this morning in August. They were looking for a drop of 0.8% in retail sales, actually a positive 0.7% in retail sales. So we've seen our equities respond, I think, favorably to that so far this morning. We're going to see all that very shortly. Don't forget, 9 o'clock a.m. Central Time this morning, we're looking for business inventories. And then at 9:30, the nat gas number. Nat gas, a very popular product these days. We should be seeing the nat gas added to the market forecast on Monday morning. Market forecast and market recap. U.S. equity futures were edging lower prior to today's economic numbers. Don't forget, it's quadruple witching tomorrow. It's expiration for our equity futures, options, single stock futures. So we've got lots of expirations tomorrow. Crude prices maintain yesterday's pricing after another drop in U.S. crude stockpiles, a surprise drop of 6.4 million barrels by the EIA yesterday. So we've got our job cut out for us. Make sure that you like, share, comment, question, feedback, and heckle at will, of course. Subscribe to our YouTube channel. Want to get notified when we do go live. A brief look at the VIX to dollar index and the 10-year yield this morning. VIX up 3% off the close yesterday. 18.74%, still not a very big number. The dollar index up a little bit this morning, 92.89. You can see that in, I think, gold and euro. And we've got the 10-year yield really kind of holding steady from yesterday, 1.33%, up slightly from yesterday's close. As always, I got to say good morning to everybody. Theo, you win the prize this morning, first one in the room. Brett, good to see you this morning. Stephen Lee, Bill Phillips, Fred. Looks like there is still higher volume in the October crude oil contract today. Yes, starting out today, that is correct. I have changed my charts over to November. There's approximately a 30-cent discount in November to October. We're going to be looking at Fred's other question here as well, looking at the daily chart, how there's a little bit of a difference in how close we might be to some of the recent swing highs. Good morning to Brian as well. George, good morning. Vince, good to see you this morning. And thanks for joining for another great group coaching session yesterday. Don't forget also today, I'm going to put the link in here. We've got our futures trading classes. We are going to be talking about trading psychology, a very important part of our trading, a very big part, lots to talk about, and we're just going to be touching on the very edge of the trading psychology. We're going to look at some of the things that we do as traders and perhaps some of the psychological, but not all of the psychological reasons we do what we do. Dr. VJ, good morning. Drew, good morning. Laura, good morning. Janus, Jason, Jerry is awake. I hope John is too. Zoraine, Tyson Wilson, is that a new name that I see here? Welcome to the Market Forecast. If you are your first trip here or your first time saying good morning, Greg H. Keith, good morning. Nemo, drop-in claims was probably from the end of federal subsidies. My thoughts exactly. Scott Matson, good morning. Steve and M, good morning. Slept super late last night. Schedule very screwed up. Should probably be very, very unlikely to trade. CNN, now that's smart. You know, if you're compromised, sitting down to trade, doing your homework, you're not feeling well, you didn't sleep well, you didn't sleep at all, you're hungover, tired, or peed off about something outside of trading, it's a good thing to think twice before getting in. At least you're not going to lose, right? Tone, PK, good morning. John, James, Ryan Williamson, good morning, all. And John, out of interest, what impact does the expiring contract have on the current market state in general? Generally speaking, Ryan, we talk about rollover as creating more range-bound activity. Now, it's not always true. There's nothing that's finite or going to happen every time in trading. But when expiration is over, then all of our longer time frame traders that have been working on getting a cheap roll are now available to hedge and create directional activity in those markets. Now, in crude oil, it happens every month. In equities, it's 4 times a year, and expiration for those equities is tomorrow. So next week, we should be able to see much more clear information in volume and in open interest that may help us in longer time frame make our decisions as day traders. Nelson, good morning. Michael Saunders, good to see you. Trading Research. Harry, good morning. KM. Amanda, good morning. Can you quickly show the setting of your volume profile? I just want to see your value area percentage. Amanda, my value area percentage is 70%. I think there's a default that goes to 75% on Trade of 8 or TS Trader. Mine is always 70%. But I will show you how I have it set up so that I have the value area, different color, and all of that stuff when we get into the charts. Hopefully I don't forget. Jimmy Decker, Fred's cousin, good to see you. April, good to see you. Robert S. April Gonzalez, what you think, John, thinking about longs and NQ? Well, we're going to take a look at that. Jimmy, we shall see. Amanda, you're welcome. Murph, good morning. I always think of that movie, Good Morning Vietnam, when I see your Good Morning Murph. So let's see what we've got going here. We've got the link for Futures 201, again, talking about trading psychology. I'm not a psychologist. I would never even think of holding myself out to be one. But I've had the benefit of working with many, and what I'm going to be bringing to you is my experience with some of the trading psychologists that I've worked with. All right, enough on that. Hey, I think we've got the charts solid, so no, and there go the charts today. All right, let's jump in. I think I've got the November contract daily here for us. So as you remember, we were looking at this as a potential Head and Shoulders, we've broken out the high end of, I'm going to put this a little bit over here. I think we've broken out the high end of our neckline here, which gives us the measured move from the neckline to the top, or in this case, the bottom of the head. From the neckline, this measured move has us really kind of looking for around $77 if this measured move does continue to play out. So we do have a new market state here. We've been showing lower highs, lower lows. We've broken out our lower highs, and we've closed up there. So that is, good news for longs, perhaps not good news for shorts. So what Fred was talking about, this is the November contract. Yesterday we talked about this swing high being a little bit of a stumbling point for continuation to the upside. You can see we put our high up there yesterday. Just as a reference, here's the October, the current front month, which stopped short of it. So Fred, you're right. We are a lot closer to perhaps some bracket highs or some swing highs in the November contract than we are in the October contract. So as I mentioned, I've switched the majority of my charts over to November. Yes, the volume is greater in October. You can trade either contract this morning. Because it doesn't, they're going to be pretty much even at some point during the day, kind of expecting higher volume in the November by the end of the day, but it doesn't really matter. You're going to be divided as far as liquidity and volume in either contract today. So if you're still looking at October, go ahead and finish the day with October, be trading November tomorrow. I've taken the step and looked into the October contract. So a new market state, technical open interest still blurry, adding 20,000 contracts yesterday back to the November contract here. We've got the same situation. We've got the same trend line. We've got the same head and shoulders. Everything remains the same, except for we may be a little bit shorter than 77 as far maybe 30 cents shorter because of the discount as far as our target to the upside. That's all going to change over time. The fundamentals, we keep seeing supply being removed. Okay, we keep seeing less and less supply here in the U.S., which is of course going to raise price. It's supply and demand, quite simple. Less supply, higher price. We're still fighting with demand, which is unknown because of the Delta variant and all of the other things that are going on politically and geopolitically in the world. So we're still wrestling between, as we always are in these markets, between supply and demand. Seems as though lack of supply is winning right now. To the 30. So relatively emotional move to the upside. It's going to have a little bit of a sore thumb effect today. Sometimes the market will kind of fall into a hangover, as our good friend Dan likes to call it. We've got maybe a little bit of short inventory. The market really kind of in range, kind of hanging below value. I'm going to be interested to see if we can come back into and accept value to push price higher. If we have a difficult time pushing back into value, we may come into repair. We've still got the gap between yesterday and the day before. We've got a naked point of control down here, which still keeps us up above that weekly kickoff high, which is 70.30 in the November contract. So just kind of looking for this market to remain somewhat range bound. I'm going to try and stay patient because we are still in range. We are still in rollover. But anything can and will happen. Overnight inventory earlier was mixed. We had a little push to the downside, which may have created a little bit of short inventory that seems to be resolving back towards settlement now. Can't see if the opening range is the high or the low, but because we're in range and so close to value, I'm going to be thinking that better trade locations may come as the day goes on. Let's now look at the E-mini S&Ps, the December contract, the June contract expiring tomorrow. Okay. Was yesterday a relief rally? We've had 6 days of lower highs and lower lows. Even on this up day, we had lower highs and lower lows. It's been one time framing lower, getting closer to an area where we would look for longer time frame traders to get involved. Did they get involved? We saw evidence of it yesterday. Does it mean that the low is in? Nothing means that. Anything can and will happen. We have looking at crude oil. We have an inverse head and shoulders. Are we creating a head and shoulders now? Our balance area here kind of goes with a left shoulder. If this remains a left shoulder and we break neckline, which is somewhere down here, that may mean that this market is technically set up to move lower. We're well aware that we still have an island top from here on the 6th of September. And since then, sellers have largely been in control. Yesterday, we had a change in that. Let's take a look at the 30-minute, and we'll take a look and see what we see as far as Delta yesterday. Potential for repair. If we open between settlement, which is actually the point of control, and this high volume node here, there may be some business left to finish up between those two levels. We've seen the market moving lower. We've seen the market responding positively to the information that came out at 7:30, but still we remain between those two high volume nodes. Repair is something that may or may not happen. It depends on what else happens, what else comes out. Overnight inventory ended up a little bit short. This could just be quite as simple as an inventory adjustment back towards settlement, but even before the open. Inside the value area, I'm going to really try and stay patient. You know, these high volume nodes are interesting areas where we may be able to find some fish. We've got point of control settlement here. We've got a high volume node and value low here. So there's certainly some day time frame, short time frame levels to look at. Now, what I want to show you is something that can help us understand who our competitors are. Now, we realize we're still in rollover. This delta could be related to rollover, but when we look at what happened yesterday we opened, we went low to high. Delta was increasingly negative as price continued to push higher. What is delta? Delta is quite simply the sum of the contracts that are traded on the bid, which are positive delta, minus the contracts that are traded, that was wrong. Delta is the number of contracts that are traded on the offer. Market orders lifting offers are positive delta. Market orders hitting the bid are negative delta. When you see market orders hitting the bid, you're seeing more aggressive traders actually initiating action to create a trade. It should mean that they are the more aggressive traders in the session, and that should mean price should go lower. So we see yesterday the delta, the cumulative delta starting at just under negative 13,000. Well, we see price moving higher and delta increasing in negativity, meaning the aggressive traders during the session were hitting bids, not lifting offers. Lifting offers you would think would be pushing price higher, and sometimes it does. But when we see delta opposite direction, that's a diversion, a divergence, excuse me, and something we want to be taking, we want to take note of. So we had somewhere in the session yesterday, we had longer time frame buyers either accumulating new longs, which we did add 23,000 in open interest yesterday. But again, this can all be very rollover related. So next Monday, after expiration, this will all be hopefully a lot more clear. But just indicating that either we had longer time frame traders accumulating longs or covering shorts is where we see this divergence in price to delta. Quite possibly, we brought new business, new buyers, new longer time frame buyers into the December contract yesterday. There's still over 600,000 in open interest to expire tomorrow. Probably somewhere around 500,000 will expire, and they will settle in cash. Then we won't have to worry about, is this rollover related or not? We'll be much more confident to say, yeah, we saw longer time frame buyers in this market yesterday. What that means is when we have longer time frame buyers showing this kind of delta divergence, we can count on medium time frame and shorter time frame traders getting shorter and shorter as price moves further and further against them. That's what we do here. Is a lot of what we're thinking is pitting time frame against time frame. Delta is not calculated with open interest or volume. It is quite simply positive delta is a market order that lifts an offer. It's a buy order lifting a sell order. Negative delta is a market order selling to a standing bid. Okay? All right. So, hang on a second here. The question about the percentage, Amanda. So this is the 30-minute chart. If I want to take a look, I can take a look and see. Hang on. So you're looking for volume profile information. So I'm just going to go to the right edge here, double left click. It's going to bring the properties for the volume profile. The profile color I've got is blue color and background. I've got my value levels, value high and low, red. I've thickened them up a little bit and made sure they're enabled. Point of control, green, thicken it up, make sure it's enabled. Value area percentage, 70%. And I want my value area to show in red just for more visuals. And then I'm going to save that to default. And then I'm going to hit save. So I hit 70% and then I put the value area a different color than the overall profile. Default, save. That's going to make sure that it opens up this way all the time. I'm missing something here. Where's the profile? Let's take a look at this on the NASDAQ. I don't know how that disappeared. I'm going to have to take another look at that. What does this look like? It's the same. 1 second. I've never seen this before. And I don't, and of course it's going to happen today when I'm trying to show. Everything looks about the same. Very strange. All right, I'll have to figure that out. Back to the NASDAQ. Okay, so to the daily chart. Still, we're in rollover. We're still looking for expiration tomorrow. Still holding up much better than the E-mini S&Ps. Rejection of price below weekly kickoff low and last week's low. Looking interesting. Probably going to be some fish there. Relief rally, or is this real buyers? We do not have the same delta information in the NASDAQ that we do in the S&Ps. Remember, the S&Ps are trading actually down here, close to that 50-session moving average. So that's why I'm saying that the NASDAQ has held up much better. Weekly kickoff low and last week's low still in play and probably going to be somewhat pivotal today. Take a look at the 30-minute chart. Okay. So overnight shorts, settlements up here, 15,496. We're kind of wrestling with acceptance or rejection of yesterday's value area. When we look at this 30-minute chart, we can see that the downside structure still remains. We've seen lower highs and lower lows consistently. So again, in range and in value. We've got point of control down here, which is a little bit different than the S&Ps. S&Ps, the point of control is under settlement price. So there was a lot more volume down here than there was as we continued this move to the upside. That's a little bit of concern. We are still going to be opening in an area of possible repair where this high volume node just above settlement and point of control high volume node can be magnets towards finishing up any business that's here in this toothy profile from yesterday. All right. Gold. Okay, we've got I'm going to go with the daily here first. Downside breakout below this trend line and below the weekly kickoff low. If this were a head and shoulders, I'm looking for a termination somewhere down around, let's call it 1723. We've got, normally a head and shoulders would be moving up to it, left shoulder, head, right shoulder, breaking out of the neckline, again, would have us measuring here. I'm not necessarily thinking this is a true head and shoulders, but it may work that way anyway. Dollar's been drifting higher. That's the S&P or the gold and the euro drifting lower. Out of balance. Early action may pay. 30. Our opening range is the high of the regular trading hour session. The Vince C. bear flag has proven to be true and has provided a excellent, opportunity to the downside. Even if we missed the downside in the overnight, when the opening range was left at the high of the session, that tells us that sellers are still in control. This is an old weekly kickoff level down here. What was that? 1757. Might be a nice spot for taking some profits if you are short. I don't want to fight this move to the downside, as we saw in the daily chart. There is possibly some considerable continuation available. There's lots of space down here, and the market's basically been one time framing since even before the London Open. And I don't want to fight a directional move. Here we are, right back to that 1757 previous weekly kickoff level. So don't fight this move to the downside. The economic numbers were certainly a challenge for this market this morning. And if you're not short, be looking for a decent pullback. I don't think there's much probability of us closing the gap today. Just try not to fight a directional market. Try not to fight a directional market. If this thing continues to the downside, you can pick bottoms all day long and just continue to get run over. Don't do that to yourself. Take a look at the euro here. The euro is still relatively range bound in longer time frame. We've got 1, 2, 3, 4, 5. We've got several volleys back and forth between weekly kickoff high and weekly kickoff low. Jimmy, I can't tell you what to do in gold. If I could, I would. But if I tell you to go short here and it's the low, what are you going to think? We're just looking for context and looking for ideas to find fish. We found a lot of fish on the short side this morning already in gold. Think about how short our short time frame traders already are. Take your tools, take your knowledge, and see if you can find a way in, or be patient and wait for some structure to lean on before trying to find some sort of bottom to this move to the downside. So the euro expired yesterday. There was 112,000 contracts of the euro that expired. So we lost 112,000 in open interest. Again, expiration. Following suit to the next. Last week's low, like the center line. So we still got the little tennis game going on here. The market started at this side. The ball is coming lower. It's going to come catch this volley, and then eventually at some point come back to the center line, just like a good tennis player would. Not suggesting that's going to happen today. The 30-minute chart. Yeah, I've gone a little bit long today, and I do apologize. Murph, you're right. I should answer those questions after I go through all the charts. Sorry about that. So we've basically traded to a previous point of control that we've now checked. We've got a lot of overnight shorts, and we seem to be continuing to push into that level. We've got a relatively poor low here. Doesn't mean that it can't be the low. We're seeing our whole moving averages now somewhat holding below price. This could be an interesting opportunity to find some fish. Although we are seeing a bit of a delta divergence, lower pricing against more aggressive buyers can be an indication that we've attracted some European longer time frame traders. Okay, take a quick look at the 10-year and let's get down to business. I do apologize. I'd like to be done before the U.S. equity open. Still bouncing back and forth in a kind of a coiling opportunity. With this move down to this trend line is certainly something that I'm going to be paying attention to. There may be fish here. The market's been bouncing off this trend line. It's getting another opportunity. It's bounced off this trend line, tried to accept above it a couple of times, was unable to do so. Now it's this trend line's turn. If it can't hold here, weekly kickoff is the next target. Below that, there is space. 30-minute chart. Okay, the market opened. There was very little attempt to reaccept inside value. So that tells me, all right, well, if we're not going to get reaccept inside value, we're going to look for shorts, and shorts have certainly gotten paid to the downside here. Just putting in another week low here. I would say that there's going to be another tick down below that right now. And not yet. So my real idea, adding 15,000 to open interest on a down day yesterday, was if we can't reaccept inside value, which there was no attempt to do so, look for continuation to the downside. A little bit late for that. All right, so my apologies again for yammering on so long. That's on me, nobody else. Looking forward to a good trading day today. Looking forward to seeing everybody at Futures 201. That's 12:30. I put the link in. And take your deep breath. Stay humble, grateful, and creative today in your trading. I'm looking forward to seeing you at Futures 201, and I'll be doing the recap today. Dan's going to be out of the office taking a little well-deserved time off, so I'll be with you for the recap as well today. So get out there, profit, trade well today. I'll see you in the pit. Might take me a minute to get there, and we'll see you later on. Have a great trading day.